Hey everybody, this is Jim at SP500chart.com. It's 5:45 on November 13th, 2013, and we're going to take a look at the S&P chart and got some stuff to say today. So, I've got something to say just about every day, but today we see some we see a nice move in the markets, and we see a couple of technical things take place. Before we take a look at it, though, I need to remind you, as always, that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts and every now and then tries to be funny. So let's take a look. Okay, guys, we are looking at a 15-minute chart. The pattern of interest that we've been looking at over the past not really the couple of weeks, but over the last maybe 4 or 5 days, has been an inverted head and shoulders-ish pattern. And the reason I say it's inverted head and shoulders-ish is because, once again, you know what I'm going to say, we get a short little right shoulder. We've seen that a bunch. At first, we had identified this inverted head and shoulders that's here in this gray oval, and it tried to break out, couldn't do it. It got over this neckline, but then it failed pretty miserably. And then we came down and set a new low. Then we came back to this high. And I made the comment back when we had reached this level on Monday and just gone sideways, wouldn't it be nice to have another little dip, come down and then reattack this neckline and then get above it with some gusto, because if we do that, then I think we've got a target in excess of 1800. And it sure looks like that is what we are in the process of seeing. But there's one other thing I want to show you. When we were looking at this small inverted head and shoulders right here, we had measured a target from this pattern alone. And we're going to do it again. There's our depth. Measure it to where we got the breakout. And we ended up with a target. Now, this line may not be exactly where it was originally drawn, but I seem to remember saying, we got a target at about 1782 just from this little pattern right here. I find it mildly interesting. I don't think it's technically important, really, because I think this larger pattern is going to be the driving force, not this little tiny part of this pattern. So we ended up with a target of about 1782, and that's about where the S&P put the brakes on. Well, it didn't put the brakes on. Check that. It's where 4 o'clock happened. So there you go, a nice move today. And also looking at the chart, I'll remind you, we had this descending wedge that when it broke out, thankfully, we were looking at this as a potential wedge. Now, I've got to tell you, a lot of times when we see these wedge patterns develop on the chart, the one that we saw yesterday, a lot of times these can be part of another pattern, so it's important to keep in mind you got to get confirmation. Now, as it turns out, this wedge right here worked perfectly. The one that we were looking at through yesterday, if we zoom in on that just a little bit, you will see that though it broke out yesterday, you'll see that it pulled back tested this, and even came down almost to this bottom line. And if I look at this in retrospect, knowing what I know about the first half of today's trading, I would likely have altered that, and it's not a perfect specimen, but I likely would have altered that to just a basic little flag pattern, not necessarily a wedge. And you could even have an interpretation that we had a dip, a deeper dip, and then a shallower dip, to where this is almost like a little inverted head and shoulders pattern. But in the interest of being historically accurate, I called it a wedge yesterday, so I'm going to leave this as such. But you can see that typically you would not really expect the back test to get back into the pattern as it did early today. But there you go, guys. We got up over that 1774-ish, 1775-ish inverted head and shoulders neckline, and we closed the day at the day's highs at just a shade under 1782. So, to boil this all down, if you're an antsy trader and you're scared about things at these levels, then you may consider a stop. I would say probably this blue line here. I think that would be a safe thing. But really, this 1774 level should serve as support. You can see that shortly after we got over that line, we did a quick little back test for just a tiny bit. I would not even call that a back test. I would just call that noise that happened to bounce at support. So now we got this leg up. Let's see what happens tomorrow. It's very possible that we've seen this market just power on up and hit targets quickly, but it would not be surprising to see a back test of a more significant nature in the next day or so down to this 1774 level. So there you have it. This pattern appears to be, I'm going to say, in the process of breaking out, because we're only about 7 to 8 points above this line, and we usually look for about 1% to really cement the idea that we're over this this resistance line. Unfortunately, this again is a small pattern, and if we wait to the point to where we're satisfied with that 1% move, then sadly, 2/3 of the projected gains from this pattern would be used, I guess you would say, or would be contained within that technically significant move. So there you have it, guys. Pretty nice situation. It's nice to see some of these wedges, even this big wedge we had right here that was a bit strange, again, because we didn't stay in this wedge as long as I thought we normally would. But you could see once we got over that line, back tested it once, back tested it again, and now here we are setting yet another all-time high in the S&P 500, and still no reason to be fearful in terms of anything ominous that might be contained in the chart. That is not to say that we might look back at this chart at some time in the future and say this area right here was, or maybe this rally from 1652 or wherever that was to here, we may come back at some point and say all of this was part of a large top of some type. But right now, enjoy it, because I think the 1800s are in the crosshairs of the S&P and enjoy the ride, guys. Just enjoy it. And whatever you do, don't get caught short. Not yet. I don't think it's time to short. Hey, guys, maybe at 1840 might be a decent short. But for now, enjoy this bull run. And guys, thanks for watching. I want to thank my new subscribers. Just thank you for giving this a try. I hope you'll stick with it, and I hope you get something out of this. Take care, everybody.